Welcome back to Golden Roll Radio, where everything almost in the whole market universe is down today, except for the VIX.
Everything is awful. Unless you played a VIX long.
And the dollar, yeah.
I don't know
US
if anyone
dollar
in here played the long on the VIX here recently, expecting a little bit of volatility leading into the election. Not going to say who.
My hand is raised.
Yeah, but I think somebody in here did put some money into the VIX over the past week.
I've been saying there's going to be volatility, so I put my money where my mouth is. And we've been saying that the gold price is going to come down, which it's doing today, Wednesday, as we're recording. Gold's below 1,900, and the first stop with gold, I think, is somewhere around 1840, 1850. And then if it goes a little lower than that, 1810 would be a pretty hard floor.
Sure. And for the time being, when we came off of the high end, when we talked about compression last week and some of these market channels, gold did come into the top end of that decreasing wedge and has turned back down. We're now sitting in the middle of that compression. So coming back down here over the next T-minus 6 days now until the election, as we're recording here on Wednesday. The election's next Tuesday. So everything is awful except for the dollar and the VIX. The dollar is up, but across the board, and we'll look at some more charts here. However, the question is it legitimate falls, or are we sticking within some of our trend lines? Are we looking at bearish pushes, or is this just normal, aggressive, volatile trading leading into next Tuesday?
Yeah, Miles, that chart that you put up last week that shows that wedge formation is a beautiful chart. I mean, we've talked about, even with that decrease that Robert just described, the expectation really isn't necessarily that it's going to break below that or above that before the election, is kind of what we've been saying, sort of trading in that channel until then. So it's actually very bullish to me with everything else going on in the markets, which we'll get to, that it is in the middle of that channel, but absolutely expected to bounce floor to ceiling there.
Yeah, I think with gold holding up as well as it is, with the stock market selling off, that is indicating that there's a move toward defensiveness. And this pullback here with the metals is what we've been talking about over the last few weeks, and it's starting to materialize. And as we go forward in the next couple of months, I want to point out that the trend we've talked about here on the show over the last few years. Toward the end of the year, the gold price has bottomed in this November to December timeframe. And I think that's happened about every year for the last 6 or 7 years with gold. And so it looks like with this pullback that it's happening, well, that's lining up with the same trend. So within the next few weeks, 3, 4, 5, 6 weeks, I think gold finds a bottom in here, and that's it. You better be in before the end of the year.
Sure. How many times do you have to put a floor in each year, right? I mean, you put these floors in at one point, and I think you are correct. We'll look at the longer-term chart here, throw it up on the screen now, but I believe it's pretty close to almost every year over the last 6, 7, 8 years that we've put that fall bottom in November, December, maybe early January, and then you have your move up following that. So it's very likely we continue that trend regardless of it being an election year. I just expect more volatility because of the added political pressure.
I would agree with that, and I think that you guys often talk about us seeing certain price points eventually based on the election results, which may obviously be very dragged out. We may not have them on the 4th. We may not have them on December 4th. And so with that uncertainty, that's going to obviously draw some volatility into the gold market and silver. And then once the election results are known, there's going to be some time frame differences between who wins and what the uncertainty or the stability in the market is. And so there's no way to predict the timing, but I'm with you. Eventually we see that floor put in, and in all likelihood, it should be in the low 1800s.
Well, I think it's key to point out here too, because we are going to look at some cases where this isn't true, but it's key to point out now that gold is still trading very normally. Genuinely, when you look at some of the equities markets, I think you're going to see some abnormalities, and we're going to take a look at that here in a second. But gold staying within a trading channel, we called for a pullback over the last couple weeks. That's exactly what we're seeing. We haven't seen anything happening out of the norm. So even though there is more volatility leading up into the election next week, the precious metals are holding very strong, and they're not doing anything absurd by any means.
Yeah, as opposed to the Dow Industrials, which closed today at a new low, almost a 3-month low.
Exactly. I think down about 8.5% this month. And the key point here is we were talking back in August about the Dow potentially pushing into new highs. And we looked at the NASDAQ, which greatly outperformed some of its previous old highs, I think as much as 28%. But the Dow fell short a second time, and now we're at a new lower low. So the Dow has put in 2 lower highs, and this October, as of today, just put in its second short-term lower low, down 8.5%. And there's more. Transport's down 9%. So they did put in a new all-time higher high, but they're now well below that. The NASDAQ, which crushed it here over the last couple months, down almost 9%. And hey, let's go over to Europe where it's even worse. The DAX down 12.5% this month and the FTSE down 8.5%. So as I said earlier, everything is awful.
Yeah, that might be due to a lot of COVID fears in Europe. Definitely want to throw out there to those who follow Dow theory that a couple of weeks ago, Dow transports were at a new high. Dow industrials were failing to confirm that bullish trend. And so the last couple of days in the equity markets selling off like they have, give a little shout out to the Dow theorists out there who know that non-confirmation actually may have meant something this time.
Little nod to Robert Rea.
Well, Miles, I'm glad you brought up the 8.5% Dow drop too, just from the standpoint of that is what volatility looks like. And it being down 6.5% just this week. I mean, Monday, Tuesday, Wednesday trading days. We're recording on the Wednesday. And yet there's gold. Robert, to your point, it's down less than 1.5% in that same period of time, despite a dollar climb here that really, to me, is indicative of a flight to cash. We see a flight out of equities in this type of an environment. Of course, the U.S. dollar is going to rally. There's going to even be some strength in some other currencies as this has a broad-based global impact if it is COVID-driven. And so expect some weakness in the precious metals prices if you see that dollar climb. But silver is no exception, quite honestly. It's showing some more of its broad-based market sensitivities that we often see on big equities declines, where silver's volatility there actually serves as an even better entry point.
Well, with silver, I'd like to see as it pushed into that previous high, it failed to really close above that previous high and then since has fallen back a bit. I'd love to see silver test the former, what was resistance, now becoming support somewhere around 21. I'd love to see that. And if we did, I'm not so sure that you're going to have a lot of time with silver spending time down near that former resistance now that will probably be support around 21. I think you mentioned a few weeks ago that silver could come down even around 19, 20 and still be in the bullish trend that it's in.
Yeah, you've got some deeper fibs down sub 20 on silver. So whether it's a resistance level or a fib support line somewhere in that couple dollar range on silver would be a heck of a pullback.
It would, and that goes to actually last week you put that chart up, which is such a beautiful chart because that's that predictive decline. I think we pull that back into this week's show, and you show that that potential drop was there. That was an increasing wedge that now has broken down below that, and so we resumed the larger trend on that, and so that's actually a great indication, and to your point,
Sure.
Man, back up the truck.
Yeah, and we'll compare these two charts last week to this week because I think it is key to show that increasing that rising channel into what could have become the new short-term ceiling in silver. And as you just mentioned, we had a break below. And then again, what I love is when you come back up, you retest the break point, which we did, and then turn down and kind of drop like a rock. Right into the 50% correction line, the medium-term 50% correction line. So silver really could come down to about 22, where the 618 is, which lines up right with what Robert was talking about with some of the previous support levels. And if we get all the way to the 786, you're down at $20. So that'd be a very deep pullback in a pretty arguable bull market at this point in silver, which just means generally you're looking at a much larger next step up before we start this kind of cyclical volatility cycle again.
Yeah, I gave a talk this weekend to an investment conference in Florida, and using your chart, I said exactly that. Look, expect these channels to hold going into the election with some volatility. But if you see silver drop below that 23 or to that 23 figure, or gold come down to that level of expected bottom edge of the channel around the 1845, then those are entry points. Until then, we're just waiting for the election to play out. not knowing that here 3 days later, we're going to get this opportunity in silver. And keep your eye on it, because the other thing that it's done, it increased the gold to silver ratio up to 81. And remember, we bottomed at 68 to 1. We've had a 13-point climb in that ratio since August. That's giving you, again, another opportunity to increase your silver holdings.
Platinum, which continues to be the most volatile of the metals, therefore you could expect it to, in these volatile times, be a few days ahead of some of the other markets. And platinum actually has, as of today, come down and again touched the bottom end of its compression. Now, unlike gold and silver, which are compressing down, platinum has actually been compressing up, at least in the short term. And we've only see it come down and break the 382 fib. It hasn't even come to the 50% line like, say, silver has already. So you are seeing a little bit of a discrepancy between the metals here, and I think that's where you're looking at some of the metals acting more as currency, inflation hedge, some of the metals acting more as industrial, which makes sense based on their general usage. So platinum, I'd actually expect platinum to possibly even turn up here. Now, I could be wrong simply because silver has already broken below its rising channel. Gold is pushing down towards the bottom end of its rising channel. Everything else is continuing to push down. So I will go out on a limb and say I think by next week, platinum might even be higher than it is today. Hard to take that bet. So with platinum, we had this kind of small compression down, which we talked about the last week or so, that we broke out above. And that's within a larger compression moving up that we're still at the low end of. So that's why I think there's a higher likelihood that we're going to see platinum move up over the next couple days. Could be wrong. Certainly could break below that. I mean, all the other metals are, so why not? And finally, closing out the white metals, palladium is a upwards compression inside of an upwards compression. I'm getting sick of saying that word after the last 2 weeks, Robert.
But then had a down day.
But it did have a good down day, and we did break the internal compression today. So we have moved below it. It is coming back up and testing it, which very likely means you're going to see palladium down at, let's say, around 2100 to 2150, and then we'll see what it does from there. But I would expect over the next week palladium to go down. So gold, silver, palladium down, platinum up. Those are Miles's picks for this week. We'll see what happens.
Jumping to the US dollar, it has come up a little bit above the declining trend line along the top end of the chart. And so as we've talked about in the last couple of weeks, seeing a little bit more strength in the dollar, which is putting that downward pressure on the metals.
Shocking, given the nature of the other markets.
Not shocking.
What's this rush to liquidity?
Yeah.
That seems to be taking place.
You get a sell-off in the equities market, boost the dollar. That type of action.
I think the reality is nobody has a clue what's going to happen next week.
Well, I mean, you have Mitch McConnell sending the Senate home until November 9th. So take that stimulus bill out of here. And so the market sells off. Dollar gets stronger temporarily. But the dollar is headed lower in a longer-term trend. Just seeing this last boost with the dollar, putting the downward pressure on the metals, which is what we've been hoping for.
Yeah, I saw an article that said the dollar was resurgent. What a joke. I mean, it's not. It's reacting to the flight of capital like you guys described.
Resurgent.
But yeah, this is not a resurgent dollar. Exactly. So, headlines like that, don't buy into them. This is a short-term little swing. And that being said as well, the long term is very bearish for the dollar in our opinion. We're still looking for that 80s type of US dollar index figure. Quickly on the dollar too, and here's why I say that as well. The velocity of money is the only reason that we don't see gold higher. These guys will argue that the technicals just haven't dictated yet. But that significant inflationary pressure, we get asked all the time, with all the inflationary measures they've taken from a money creation or money supply issue not being felt in prices or in inflation when you're paying at the cash register, why is that? We're going to throw you quickly 3 charts. These 3 charts are data from the Board of Governors of the Federal Reserve System. One is the debt, and one is the money supply, and look how parabolic these two are. The U.S. public and private debt has skyrocketed, especially since 2008, as has the money supply. But as Rob McLaughlin loves to point out, he's been on this show, here's a reason that we're not experiencing that. The velocity of money has plummeted. And it's not enough of a turnover of a dollar from one hand to another that is really being realized yet. And once it is, and that velocity of money picks back up, that's when things get real aggressive, and that's when Miles is going to have a very hard time predicting from a technical standpoint, because we're going to be in uncharted waters.
Am I now? That's going to do it this week for Golden Rule Radio, making the bold assumption the world still exists a week from today. We'll be back next Thursday with our election wrap-up. Actually, we're going to talk about the markets. In the meantime, if you liked what you heard, hit the subscribe button, ring the bell. You can find more info on our website, McIlvaney.com, Twitter, ICA Gold, or Facebook, McIlvaney Financial. As always, if you'd like to discuss your personal portfolio with one of us, please give us a call at 1-800-525-9556.
Thanks for listening. Have a great week.